we had a call, and I was still in my Wall Street interview, I was wearing a suit.
Yeah,
I was not being very genuine, not giving any glimpse to who I was, and just giving very hyper polished answers. It was all kind of
yeah,
BS. And so I think we got 19 minutes into the call, and Stig kind of looks at me and he goes, "I don't feel like I know you at all. I don't feel like feel like I'm talking to, just a blank suit. There's no person in it." And so that was like a very eye-opening moment to me of like, wow, okay, Stig and this company is a really genuine place that values radical transparency is one of our company's core values, and just being honest and authentic at all times.
yeah.
And so I kind of flipped the script, and for the remainder of the interview, we just had a kind of heart-to-heart, very honest conversation. And I thought I totally messed up the opportunity.
Ladies and gentlemen, today we have our esteemed guest, Shawn. He is an integral member of the Investors Podcast Network, where he shares his insight and knowledge with all the listeners and readers of the newsletter. He also took part in some episodes of the podcast and also made some very cool videos, which I really recommend to you guys, about real estate and a bunch of topics that really add a ton of value to the viewers and listeners. So it's a pleasure to have you here, and let me know if you have something to add.
Thanks for having me on, David. Excited to have a chat today.
That's nice. That's nice. Today, I was kind of nervous in starting, so let's see how it goes. But I think it will go well. Sometimes when we're nervous, it means that's something that's really important to us. So I hope it will be a very interesting chat. So the first question I have for you is, I wanted you to share with us, listeners, what has been like what has changed in your life, and what does the experience of working in the Investors Podcast Network, which is a very interesting project, and I'm sure it's pretty valuable to all the enthusiasts about finance, and especially value investing and this kind of subject. So what has changed in your life personally and professionally since you've started working in this company? You already shared with me previously how you feel like these are very high quality people. So I'm curious to know more about this. Could you expand?
Sure. Yeah. Yeah. So the Investors Podcast is a podcast network of, we have a couple popular shows, with our most famous being We Study Billionaires. And it's actually the largest stock investing podcast in the world. I'm not a podcast host. I write our daily newsletter, and it's been an absolute pleasure to do that. For coming up on actually this July will be the 1 year anniversary of when we launched it. But it's it's an incredible experience to be a part of the company, because when I was in college, actually, I remember March 2020, I got sent home from school because of COVID.
Yeah,
Yeah, we had the the COVID lockdowns. So I went home, and once I kind of accepted the fact that, okay, I won't be spending this semester at school, I'll be at home, that I wanted to essentially find the most productive use of my time. And so I remember I was taking my dog for a walk, and I searched investing podcasts, and I found the We Study Billionaires podcast, and I listened to our company's co-founders, Preston and Stig, talking about Warren Buffett. And I probably had first gotten interested in investing when I was pretty young. And maybe this rekindled my interest in it after being less engaged while I was in college. And so I became an avid listener of the shows, and flash forward 2 years, and all of a sudden I'm working for TIP. And
that's incredible.
yeah, Preston and Sig were very much mentors to me, and shaped a lot of my learning. And not just, anybody can study financial markets, but really with a principled view of not just how markets work, but also how the world works, and good business practices of, your business will be more successful if you treat people well, right? And you don't try to maybe squeeze every penny out of every partnership, and you build goodwill. And I think Guy Spear has a saying of compounding goodwill, and that's something that we take very seriously at TIP, of building lasting relationships with those we work with in the industry, and really just building a brand that people respect and rely on. And they know that whether it's with our newsletter or with our podcast, that hopefully we're delivering the highest quality content. Maybe they'll see that day when it comes to reading about stock investing and finance in a way that's understandable, and also knowing that we're not necessarily that we're grounded in good intentions, and that first and foremost we're trying to educate and teach people about how markets work, how stock investing works, and not necessarily sell you our stock picks, for example. We never do anything like that. So I would really say what's been great about working at TIP is just, as you mentioned, this high quality culture of people that are really motivated to not just continuously learn about finance and investing, because you can spend a whole lifetime studying legendary investors and market history and strategies that work and don't work, but also really being interested in sharing that knowledge and that education with people. And so when I write we do the newsletter 7 days a week to about 30,000 readers. And so every day I sit down, and my goal is to bring that kind of principled view of helping people understand the news, because I think sometimes in value investing, people will tell you that you keep your head down and focus on a stock and don't worry about the bigger picture or the news. And I think there's a nugget of truth to that. But on the other hand, we have to be, I think as savvy investors, we should be aware of what's happening in the world around us, be aware of what the Fed is doing and some of the broader macroeconomic conditions, even geopolitical factors. So we shouldn't be ignorant to those things. And so what I really hope to do with the newsletter, and I have two wonderful co-writers who work on it with me every single day, is we try to bring that value investor, long-term principled perspective to understanding the current news. So it's not necessarily clickbait of you're trying to scare you, fear-mongering of the bond market's going to crash, pull your money out into gold. We don't do stuff like that, but we try to explain, okay, well, this is why people are concerned about the treasury market, and this is what's going on, and this is why interest rates are rising, and this is how inflation factors in, and maybe these are some actionable things you can do to protect yourself. So yeah, it's very meaningful to be a part of a culture of people that are committed to continuously learning, and also sharing what they learn with others, and just being honest about it of, this is what I found interesting. I wanted to pass it along to you. I'm not necessarily saying you should try this strategy, but I'm providing maybe a gateway to it, and look into it more yourself.
Yeah, I just want to thank you guys a lot, because sometimes the way you start in something really shapes your future. So I think the people that start in investing through you guys and what you shared just get a huge advantage to whatever other people you are listening to, because in YouTube and whatever you watch, there's a ton of misinformation about investing and quick schemes of getting rich, those kind of things. So I guess you just get a very good advantage by reading to your newsletters, videos, and all the content you shared, because you always like are very broad in what you speak about. It's not just value investing, is like understanding the broad picture, and as you said, like understanding a little bit of mental models that can help you understand better the world. So that's interesting, but I'm more curious about like how this opportunity came about, and like how, because I find it such a fascinating story that like you're just walking with your dog and then you find this podcast, and 2 years later you are working for this company. So I bet it's like a dream come true to you. So how does this came about? Like was it cold calling, cold message? What was it?
Yeah. It still feels like a dream to me. I kind of wake up every day, and I'm not sure that I believe that I have this job and this opportunity. So it's incredibly humbling, and I feel like I have so much to learn. But to paint a little more color around it, I was a junior in college, and I started listening to podcasts, and I couldn't get enough of them. They were weekly episodes, and I went back and I think listened to almost every episode since the beginning. Preston and Stig had some free courses about intrinsic value and value investing and how Warren Buffett thinks about the world. And I took those courses, and then I started finding other similar podcasts and just trying to learn as much as I possibly could. And, flash forward senior year, maybe end of junior year is when you kind of really start thinking about job opportunities, applying. And I applied for a lot of very standard corporate finance jobs, insurance. And I was kind of the perspective of, I just want to get a job anywhere, I just want to have a job. And there's a bit of this is still kind of the early days of COVID, and it wasn't clear how well the economy was going to bounce back and whether companies were going to be hiring and whether you were going to be working remote or in person. So I feel like the last 2 years we can look back and it feels like the economy has actually been pretty strong. But at that time, when I was first applying for jobs, there was actually a lot of uncertainty. And so that's sort of why I say I was like, okay, I just need to get a job somewhere. I need to be able to afford an apartment out of college. I don't want to necessarily just be stuck living with my parents, right? I need to get some kind of experience. So I applied for a ton of jobs. I interviewed everywhere. I learned to be very, I would say, polished, but inauthentic. I learned how to give the very corporate responses and how to wear a suit and, to play the game a little bit. But it was it all kind of felt a little gross to me because it was just not genuine and authentic. I didn't feel like I would do an interview, and it didn't feel like I knew the person who I talked to for an hour, and it didn't feel like they knew me at all. So I spent that year interviewing at places, and I did find a job. I worked at S&P Global, and actually they were one of the best. They were the best company I worked with, despite being kind of a classic, a pivotal player in financial markets. They actually did really feel like they cared about their employees, and a very kind of vibrant young culture. So I moved to Charlottesville, Virginia to work for their financial markets platform that's called Capital IQ. And basically it's a huge data aggregator of everything you could ever possibly want to know as a participant in financial markets, whether you're a banker or commercial or investment banker, or whether you're a hedge fund manager. There's enough data for whatever you want to track, and it's kind of one central platform. It's an alternative to maybe a Bloomberg terminal, if you're familiar with this. And so it was S&P's version of that. So I got to meet a ton of really interesting people in the maybe 9 months or a year that I was a part of their associate development program, learning about different parts of the financial system, learning about working with data and learning what different types of clients want, what were commercial bankers looking for relative to what were investment bankers looking for, stuff like that. And it was a really interesting job. And I saw one day that their TIP had sent out an advertisement saying they were hiring a YouTube host. And so I just started my job at S&P, but I sort of decided just to wing it a little bit. And kind of threw a Hail Mary, I guess you could say. And I sent out this message, and I think the only thing that stood out on it was it was funny at the time. I was debating whether I should include it, but I wrote this list of all the books that I had been reading. And they're actually all books that Preston and Stig, the founders of the Investors Podcast, had essentially recommended over the last 2 years. And every time they recommended a book on the podcast, I just read it. So I had this very kind of standard application, and then I had this long list of books that I had read. And Stig replied to my email, and I think he said something along the lines of, "Wow, I'm very interested to meet you by this list of books you've read at a very young age. I think that's a very impressive reading list to have." So actually this thing that I was kind of mixed about including turned out to be what got his attention. And so we had a call, and I was still in my Wall Street interview, kind of I was wearing a suit. I was not being very genuine, not giving any glimpse to who I was, and just giving very hyper polished answers. It was all kind of BS. And so I think we got 19 minutes into the call, and Stig kind of looks at me and he goes, "I don't feel like I know you at all. I don't feel like you've been, feel like I'm talking to, just a blank suit. There's no person in it." And so that was like a very eye-opening moment to me of like, wow, okay, Stig and this company is really genuine place that values radical transparency is one of our company's core values. And just being honest and authentic at all times.
Yeah.
And so I kind of flipped the script, and for the remainder of the interview, we just had a kind of heart to heart, very honest conversation. And I thought I totally messed up the opportunity. He
Hmm.
kind of left it of, oh, I don't think I'm going to hire you to be our YouTube host now, but maybe we'll stay in touch in the future. And I thought it was a very polite way of kind
Yeah.
of letting me know.
Declining.
Yeah. And then a couple months later, I get an email from him, and he asked if I can meet on Thanksgiving Day. And I was
Okay.
like, yeah, of course,
That's
I would
pretty
love
interesting.
to. You've been a mentor and almost a hero of mine. So I, of course, would happy to meet with you. So we met the morning of Thanksgiving, and we just kind of caught up, and he gave me the opportunity to write, sort of to test my skills a little bit, I think, to write an ultimate guide to stock investing, which is actually still an article you can find on our website. But I
Nice.
think he was going to pay me some nominal amount of money and essentially allow me to test out and showcase my knowledge of stock investing in this blog. And so I started working on that, and I poured my heart into it for maybe 2 months. And I was still worried that I don't know, that maybe it wouldn't be enough. So I started a Medium blog on the side, and I just started doing kind of extracurricular writing that I hoped he or somebody else from TIP would see, writing about, more than just stock investing, but kind of what I thought was going on in financial markets and inflation and interest rates and stuff like that. And so before I'd even finished the guide, Stig saw some of these other articles that I'd written, and he messages me, and he's like, actually, I'm really impressed with your kind of depth of knowledge. And you're a better writer than maybe I was expecting you to be, and I'd like to start working with you. And so he offered to have me join as the newsletter writer for a newsletter that hadn't been created yet. We had a mailing list that the company had accumulated from years to the podcast, but we didn't use it as like a daily or weekly newsletter by any means. We used it more just for kind of periodic updates about the company. And so then it became, I started thinking, okay, like, not only do I have to write really well about markets, but this is sort of a new business opportunity, and figure out, like, how is the newsletter going to be profitable? How are we going to fit in advertisers? Is it going to be daily? Is it going to be weekends? Is it going to be weekly? What is it even going to look like? What's the style and the tone and the format going to be? So I quickly started trying to work on some of those projects. And I started with the company in March of March of 2022. And then the newsletter went out for the first time on July 1st. So we had a couple months to prepare. And funny enough, in the meantime, Stig goes, I never found anyone to fill that YouTube host position. And you applied for it originally. And now that you're working for TIP, you might as well take a shot at it. So they sent me a bunch of video equipment and cameras, and it kind of just blew my mind. I never actually really saw myself as somebody that would be like a personality on YouTube or anything like that. So all of a sudden, in my girlfriend's parents' attic, I had this whole professional YouTube studio set up. And I ended up doing YouTube videos for 6 or 7 months after that. I wouldn't say it wasn't, well, it honestly, it probably wasn't as much of a success as we were hoping. And it became very obvious that the newsletter was growing and making money. And YouTube, it's just a much tougher business. You really have to get a lot of views to make enough money from advertisers for it to be worth the time investment. So I think last October 2022, after 6 months or so of making videos, I stopped YouTube and went solely focusing on the newsletter. And the team has grown from, well, when the first newsletter went out, it was just me as the writer, and then we brought on another writer, and then we've added a third writer since then. So the team has continued to expand. We went from 5 days a week to 7 days a week. And it's been a ton of fun. Every day I'm forced to learn more about markets because that's what we're writing about. But I've also learned a lot about the business of newsletters and being, of media. And it's pushed me to be much more entrepreneurial than I ever maybe thought my career was going to be, because I thought I would just be a financial analyst at some name your kind of blank corporation. And
well, that's
been okay, but
that's like a common theme that I see among the people that I interview, because like I had this very interesting guy in Spain. He's actually a full-time YouTuber, and he used to work at Allianz, that insurance company, and he had
Mm,
like the same experience as you, like, oh, this is super fake, like, and I find it like quite interesting, and so like such a interesting experience. Like Stig actually told you, oh, I feel like I don't know you. Like
yeah.
that's something that takes some, I don't know if it's courage, but really shows what he values. Like if it's straightforward and tells you that, he's really making you a favor, because sometimes people are just in the mindset of these big corporate jobs, and as you said, it's not like people are bad or they are bad intentioned, but they just polish themselves to fit in. And I
Mhm,
feel like that's very interesting, and I'm pretty sure that will be like a pivotal point of your experience for sure. Like I don't know how I would react. Like I would be super like shocked, like if someone told me that. So it's super interesting, and I can tell you right now that at least for what we talk already, I feel that you change a bit, because like now I feel like I really I'm talking to, because yeah, sometimes it's true. You're talking to people and you feel like, oh, I'm not talking to a human being. This people is not like it's a robot or something. So
mhm,
I don't feel that with you, and it really feels bad when you had that have that feeling. And
mhm,
um, I don't know if it was, yeah, I'm pretty sure it was Monish. He's like a big fan of this book, Power versus Force,
mhm,
from David Hawkins. And yeah, they talk about like this radical, being radically transparent and just being very honest with yourself and with others. And I feel like we do have this sixth sense that we can spot even subconsciously, like if people are not being honest.
mhm,
And that's just something that I fell in love with in the value investing community, because like everyone is trying to help everyone else, and uh, be very straightforward, like because the big mentors of this community are like that. So I think we are really shaped in that way. And man, I just give you a big congratulations to because working in such a good company at such a young age, it's really like um, very meaningful experience, because as you said, like most people just go through life like they are just surviving or something, and that's not the way, I think. So yeah, it's super interesting that you found at such a young age, like you find yourself working with your mentors. Like
mhm.
that's incredible. um I would like to actually learn a bit more about Stig, because I feel like I've listened to a bunch of episodes of the podcast, but as it happens with most of the hosts of podcasts and stuff, you always get to know the guests and not the host. So
Mm.
uh, I don't know if you have some insights or whatever, if you know a bit about his history, but could you share a little bit?
Yeah, yeah, happy to. So Stig and our other co-founder Preston started the podcast in either 2013 or 2014, and I think they were flying back from a Berkshire shareholder meeting, and they had gone out to listen to Warren Buffett speak, kind of one of the faces of value investing, and they're having such great conversations on the flight back. They're so inspired after listening to the meeting that a friend recommended that hey, you should take these conversations and record them. So they did, and they started testing out weekly episodes. And I think Stig would be the first to tell you, because he's maybe he's very humble. Honestly, he doesn't like to take too much credit for some of his successes, even though I would tell you they're probably very well deserved. He would tell you that they got lucky to an extent of it was still the early days of podcasting, and even though maybe there were some big shows that had started to gain traction, there are a lot of niche areas that there wasn't a clear market leader in yet. And so they filled that void for kind of stock investing. And really it's been, I think they got good traction early on, and they did it as sort of a passion project for a couple of years. And then once the show was routinely at the top of the iTunes charts, the top 20 business podcasts every week, stuff like that, I think Stig decided to commit to TIP full time and growing it into a bigger brand. So, not just the We Study Billionaires podcast, but an actual network of podcasts. They hired my colleague, Robert Leonard, and he launched a millennial investing podcast that, to its name, was focused on helping millennials learn to invest. He also launched a real estate investing podcast series. And then Preston ultimately went on to launch a Bitcoin fundamentals podcast. And so, and then in the years since, we've also brought in William Green, the distinguished author of Richer, Wiser, Happier, and he has a podcast by the same name called Richer, Wiser, Happier. The company has had tremendous success in the podcasting space, and Stig has really been instrumental in giving the vision that's been necessary to drive that success. And even though he's very humble, I would tell you that maybe they did get lucky about the timing of when they made their first podcast. They're also both incredibly smart people that are just so humble and genuine, as we were talking about before, that you love listening to them, and they just feel so easy to learn from. And finance is something that finance and investing, those are almost scary terms to some people. It really, it's almost like math. You say math, and some people shudder because I think as a society, and I mean, it's not just the US, but really, I would say across Europe too, and probably much of the world, people don't feel comfortable talking about personal finances. Money is a very sensitive and awkward topic. And if you don't work in finance, it's kind of like there's such maybe a stereotype around bankers, and it's kind of mysterious. You don't maybe understand how the financial system works, and it just seems like all this illusion. Okay, why is the economy growing? Why is it not growing? What's happening? How do banks work? How does investing work? So I say all that to kind of emphasize that for a lot of people, especially non-financial professionals, somebody who's just a plumber or an electrician or working at a media company, and they're not working necessarily in finance, for a long time, I think learning about what was going on in the economy and financial markets and investing is very intimidating. And honestly, I see Preston and Stig's We Study Billionaires show as one of the earliest and most successful examples of finding a way to bridge kind of the regular world that people live in, and then this abstract world of finance and investing that used to be kind of a very niche club. Like either you understood and read the Wall Street Journal every day, and you worked on Wall Street, and you kind of had this air of superiority, and like it was very exclusive to know about stock investing. That's probably what it was like to some extent, maybe in the 80s and 90s, to now we've seen this like kind of democratization of finance, where more people than ever, partly enabled by technology, can trade stocks, invest, save their money, but also can learn about it and learn, good strategies and principles for navigating the financial markets. And so Stig and Preston really set the precedent for that. And they, like I said, it found a lot of success with their podcast, and people just found it I know I did personally. If I had on that, that March 2020 day, walking my dog, turned on a podcast, and it was, some Wall Street hedge fund billionaire just using jargon and fancy language to talk about stock investing, I probably would have turned the podcast off. And I don't know, my life could have gone in a very different direction. But Preston and Stig, and this is something Preston says a lot, is that, if you can't explain something to a 5-year-old, then you don't understand it well enough. So they were always very keen to avoid jargon as much as possible and to simplify, I wouldn't even say complex financial topics, but just topics that people are uncomfortable with because of how much jargon people normally use when talking about them, like compounding your investments over the long term, stuff like that, where you can easily start using jargon and it can be very intimidating for people. They did a masterful job of making finance understandable and not intimidating and not scary, kind of like making it fun to learn math, you know?
Yeah.
And so what I see it as, we carved out this success, or they carved out this success in the podcasting world. And my opportunity has been to try and recreate the brand and the style and the tone and the attitude of our podcasts in a daily newsletter. So I'd say, I'm continuously learning, and it's still a work in progress in many ways, but that's kind of the way I think about it, is almost carrying the torch, they changed my life with just their ability to simply explain what was happening in the economy, why interest rates were rising, why it's important to not sell out of your stocks during a correction, and you should actually be buying more when share prices are cheaper and stuff like that. And I feel like it really changed. It's increasingly more common now. I'd say value investing maybe has had kind of a renaissance, or a lot of people are getting into it. But in part, I would say that Preston and Stig have been very very key to
Yeah,
exposing
sure.
people to hundreds of thousands of people to those concepts.
Yeah, that's so true. And even speaking about books and William Green, I think compared to the old classics of investing, like The Intelligent Investor and like securities analysis and those kind of books, like the books that nowadays authors like William Green write, or the Jake Taylor's book, the Young Allocator, I think that's the name. Those are books that really are the ones that explain things in a simple way, and maybe then you can like go deeper and go to the old classics and stuff. But yeah, I think like it's so important to democratize finance because, as you said, like people almost get fearful when talking about bankers and finance in general. So that's so important, and I feel like it's a great position to be in your position. Like you can share, and it's also what I'm trying to do with my channel. Like I envision that the viewer is like my friend here that doesn't understand much about finance, and maybe he's more keen on sports or whatever it is. But if you put things in a simple way, as you said, and don't use much jargon, people understand it, and they even get super curious about it. Oh, is it that interesting or that fun to learn? So yeah, I think it's very valuable what you guys are doing. And speaking about mentors, this is my favorite question of all time, because when I listen that people kind of know my mentors or have some experience. For example, I interviewed Michelle Markey. She's a YouTuber, and she was featured in one of the millennial investing episodes. We actually connected because of that, I think. That's interesting. But yeah,
Yeah.
she talked to me about some of his interactions with her mentors, like Jamie Dimon, Monish Pabrai, William Green. So I'm curious to ask you, like, have you had any cool interactions, or just any interaction with some of your mentors, or maybe some super investor? Could you share with us?
Yeah. Well, so I guess kind of what we've been saying is Preston and Sig very much were those mentors to me. And, like we were talking about earlier with that first interview where Sig kind of called me out for not being genuine. I can't emphasize enough how devastating that was for me. And, they say don't meet your heroes. And it wasn't because of anything he did, because he's a wonderful person. It was, but really it was actually don't meet your heroes because I was so nervous that I put on, this like fake
Shield.
personality. Yeah,
Yeah.
the shell of myself. And so I actually felt like I embarrassed myself, and ultimately, obviously, things worked out. But that was a funny story of, you know, it kind of meeting somebody who I consider to be a super investor and a mentor. How you can kind of botch it, and
Yeah.
you know, if he had ended the call there, I probably would have been devastated. I honestly, I probably would have cried. I mean, it was, because as soon as he said it, I realized that how inauthentic I had been, and just, you know, giving these corporate responses to interview questions. And it was really embarrassing for me, because after listening to the podcast for many years, I knew that, you know, these are not the values of his values, or Warren Buffett's values, or so I think there's a lesson there, and maybe giving second chances. This certainly gave me a second chance. But in terms of other, you know, super investors, this this year in a month from now, actually, I'll be going to the Berkshire shareholder meeting, and so
Oh,
I'll get to see Warren and Charlie, and hopefully it won't be their last year doing it. Hopefully they have many more to come, but it'll be my first time going out, so I'm really excited to have the opportunity to listen to them, and, you know, learn from the very best. And as Monish would say, and, you know, we should try to clone the people who are at the very best of their profession, and implement, you know, their practices. And it's kind of a way of almost cheating time, rather than, you know, they've learned these lessons over 70 or 80 years. And so they're saving you all this time by giving you the knowledge and the lessons that they've learned, so you don't make the same mistakes. So I'll be really eager to listen to them. We will be having some events there, where, like, kind of fan meetups. And so Stig will be there. My colleague Clay Fink, who now is a host of the We Study Billionaires podcast, he'll be there. And a couple other of our podcast hosts will be there, William Green, and hopefully some other friends of TIP, like Monish. I'm not sure whether he'll be there, but I hope to see him, and some other, you know, famous value investors in the space at the meetup. So I don't think I've had too many crazy stories yet, but I'm excited.
I'm sure you will have a few to tell us. Maybe
Yeah.
we should have done this interview like in 2 months or something.
Yeah.
But I'm sure it will be a perfect, like a crazy experience for you, because I think it's the dream of many people that are into this world, like to go and meet Charlie and Warren. And as you said, like, it's not that it's the last year, but it gets increasingly like more exclusive every time you go, because you never know. And they are like perfectly healthy, and they still drink their cokes and stuff. So I
Well
feel,
into their 90s.
yeah, I think Charlie will be like 100 years old in some time.
Yeah. Yeah.
uh
98 or 99, I
yeah,
think. But
so I'm excited for that. But yeah, I think that will be a crazy experience, like the amount of wealth of knowledge that you condense in those meetings. It's amazing. So yeah, it's, yeah, very very interesting. And I'm curious to know, like, how do you guys work? Like, you work remote, right? Like the members of the TIP crew, let's say.
yeah. So there are pros and cons to being entirely remote, but yeah, it's safe to say we're a fully remote company, and we have, you know, Stig is based in Europe. We have members of our team.
Denmark, right?
Yep, Denmark. Yep, and we have people based in the northeast of the U.S., Canada, out on the West Coast, middle of the country. So we have people all over the U.S., and then we actually have an operations and support and creative design team that works in the Philippines, and so they do things like edit our podcasts and help with the website. And so we actually have a
Global presence.
very global presence. Yeah, for a company of, I'll get the number wrong, but maybe 25-ish employees. We have a very global presence, which is cool, because, you know, it's This is a company that even maybe just a decade ago, certainly 2 decades ago, could
Couldn't
not
be. Yeah,
exist. Yeah, it's just not possible. For example, the internet bandwidth just wasn't good enough to accommodate video calls like this. And we do try to make the most of, I guess, being remote. And so maybe weekly video calls, trying to simulate a little bit as much as possible what it's like to actually be in a real office. But I guess what I would also say to that is when we do have the opportunity to all meet up in person, it makes it all the more
yeah,
special. So in a large chunk of the company that's based in North America and Europe is going to be at the Berkshire meetup. So it'll be really cool to meet some people in person for the first time. Others I've met once before, so I'm really excited to have that opportunity. And it's so much more meaningful when your company is only meeting one time a year. I think you really cherish the opportunity to build relationships. And I do like working remote. It's very gives a lot of flexibility, but at the
yeah,
same time, you could probably say, maybe the downside is, when you're in your 20s, it'd be nice to have coworkers that you can, maybe on a Friday after work, you go out and get drinks with,
yeah.
or do kind of fun stuff like that. So if anything, it challenges me to be more social in other ways, and find new ways to push myself out of my comfort zone to maybe make those relationships and build those friendships. So I really think either way, it's whether you're working in an office all day or whether you're working remote all day, it truly is what you make out of it.
Exactly. It's the story you tell yourself. So if you tell yourself, it's great, and it actually incentivizes you to build new connections. That's what will happen. So
Yeah.
yeah, I'm in line with what you said. And also, like, I have this common thing with you, like I don't have much of the social medias, like even though I'm on YouTube, and like I don't have Instagram and stuff. So it forces me, like when I want to call or talk with someone, I actually call them or
Mhm.
just meet with them. So I feel like it gives you this kind of advantage because as you said, when you actually meet the people, it's much more meaningful. So yeah, it's very interesting, and it forces you also to manage very well your time and yourself, because most people would get distracted or something like that. So
Yeah,
it's
it
it's
helps to
interesting.
have a daily deadline, right? The newsletter goes out at 5:30 every day.
Oh
So
yeah,
I agree. It is tough, and I've had to learn a lot of discipline, but it helps having a daily goal of, hey, the newsletter's got to be out. So you can't, if you have a lazy morning, you have to make up for that to hit that hard timeline. So
yeah, and that's interesting. Also, I think it was actually a blessing for you that you get to focus on the newsletter, because mixing the YouTube with the newsletter, maybe it would give you more of a hard time. I don't know. You would do it no problem, but I feel like focusing just on the newsletter, and that's something also that I kind of switched recently, because before I used to consume a lot of information like in audio and just videos, or let's say fast ways to consume it. But now I'm switching more to like written word.
mm,
And this was something that I picked from Monish and also Charlie,
mhm.
because and the interesting thing is, like I've been studying these kind of people for years, and there's some things that you only learn after a lot of time. uh, and I'm speaking about like multitasking. So Charlie always says like don't multitask, focus, those kind of things. But you kind of subconsciously think that you are good at multitasking. So I used to, let's say, go for a walk and listen to something, or an audiobook, or just be working out and listen to some podcast. And at the end of the day, you get like that sense and dopamine hit, like, oh, I'm learning so much, I'm being so productive. But at the end of the day, you are just really consuming information fast, and you are not retaining anything. So Yeah, I will be for sure an avid reader of your newsletter from now on, because that's something that I'm trying to do more. I don't know, what are your thoughts about this? Like, what do you think about this?
Yeah, yeah. It's funny you say that because I'm guilty of maybe multitasking because I actually most of the books that I read, I listen to as audiobooks. And you know, I guess I don't really have a good excuse, but I do find that I don't know. And I'm probably guilty of this like digital age where I'm so used to like you said, Instagram and social media, and with this like constant dopamine hits, where I actually embarrassingly find it hard to sit down and read a full book. I've
Hmm.
kind of it's just hard to, things are so busy these days. I do find it difficult to really sit down and do it. So I guess a bit of a cop out for me is I actually do go for a lot of walks and I listen to audiobooks, but I think you have a good point there of like, there is something you lose. It's a different experience, and it's a different way of internalizing information. And I don't know if it's better or worse, but it is certainly different. And you're probably right to say that you're going for a walk and you might be more distracted and less able to focus on it. Something that I've challenged myself a little bit in that same vein is, I used to just like churn through podcasts and audiobooks, and it was like a way of doing a checklist. And it's like,
Right.
okay, I can say I read The Intelligent Investor. I can say, I read XYZ book and I listened to XYZ podcast this week. And it was almost maybe like a bit of a compulsive thing. It's like, okay, I have all these things I need to check off and I'm just going to get it. And in many ways, I was losing appreciation for why I was actually listening to those things. And it's not to just say that I read that book and so I can check it off and brag that I read it, but to actually internalize and understand the concepts. So while I still don't sit down and read a book line by line and annotate it, maybe the way that would probably be the best way to absorb the most knowledge out of it. I do try to, I used to listen to audiobooks at higher speed settings. I slowed that down. I rewind a lot more, and I try to be more intentional about of, do I actually understand the most important concepts? And if I didn't understand a section, I'm re-listening to it and not just pushing through the next section. And I've re-listened to several books that way too. So I
Yeah.
think I think it's probably, if I had to guess, more if you take one book and you read it, listen to it, and really understand it, one great book, that's probably as valuable as, skimming through 5 to 10 books would be my guess. And that, really maximizing the quality of the lessons that you take away. But when you're allocating time to reading something and really truly absorbing those concepts. And this is something Stig does very well. I would say more than anyone I've ever met, Stig is very great about intentionally reading a book and then applying those lessons to real life. And so it's funny, there have been a number of books that he's asked me to read. And as I read them, I realized that, oh, okay, I can see this is why he gives feedback this way, and this is why TIP is structured this way, and this is why the company does this, and this is why our values are set up this way. And you can see it's because he's really carefully read great books and pulled out the most important nuggets and then applied them in real life. Because I think that's just something, I was guilty of it too for a long time, of just
We
reading
are
a
all
book,
guilty.
say you read it. Yeah.
Yeah.
And
It's
and
a
even if
flex.
even if you think you understood it, you don't apply it. It's
Yeah.
like, okay, well, that's really great advice. I should drink more water and walk more, and I should whatever, improve
Yeah.
myself in whatever way, but then you don't do it.
Yeah.
So I actually found it very motivating to see somebody not only just listen to those lessons and absorb them, but actually apply them. And that's really, TIP in many ways as a company is an amalgamation of some of the greatest principles and lessons that Preston and Sig have learned from reading hundreds of books over the years and speaking to the world's best investors and world's best business minds. And then I'd like to think that, they've taken those learnings and use that to structure our company and how we treat people, how we approach learning and making mistakes. You're never going to get fired for making a mistake at TIP. If anything, you're going to get fired for not taking risks, because anybody can avoid making errors.
Yeah.
they don't take any risks. But that's not the kind of, you're going to trend as a company or project or whatever you're working on, you're going to trend towards mediocrity if you're afraid to take risks. So as a company, I think it's very contrary to how a lot of companies work. Everybody from the bottom up is empowered to start new initiatives, start new projects, test things out, experiment, and you're never going to be chastised or punished. Even if you have a project and it's a big failure and you lose money on it, no one's going to, belittle you and call you dumb or say that you should have known better. They're just going to ask, okay, well, what did you learn from it? Okay, that's what you learned. And, let's apply this next time, and you keep pushing forward and not, looking in the rearview mirror to see what you can learn, but not fixating on it in a negative way, I wouldn't say. So,
well, that's very, very powerful. Yeah, I would say like to your point of like audio, I was not like saying, oh, audio is like bad or something. Everyone is like different, so it's really about. My point was like that kind of flex culture about reading. Oh, I read these 100 biographies or 100 of these investing books or anything like that, and I really agree with that thing that you said. Like, if you read one book properly, it's probably going to be much more life-changing than if you read 10 or 20 or whatever books like skimming. For example, I read like the How to Win Friends and Influence People, and they actually advise you to, when you finish a chapter, to go back and reread it. So I actually did that, and I think that's the book that most changed my life ever. Because like I really kind of subconsciously understood the concepts. Whereas like with other books like The Art of War or some other books, like I just read it because I thought it was good, and to some point it helped me because it got me into the habit of reading, and now I don't know if it's genetical or it's just something that I've nurtured. I can actually like think and stop and take notes and like ask myself, am I really like understanding this or things like that. But yeah, I think it's not as valuable if you just skim. But some people, I know like a lot of people that are very successful and don't even read. So it's not about how you consume the information, it's how it's like the quality of it. And yeah, it's like that. I would like to transition to some other concept that interests me a lot, like independent thinking, and to what you were speaking about, like valuing taking risks and being like an independent thinker at the end of the day. This kind of brings it's not comfortable to be like in the position where you are always like doing things differently than others and being a contrarian. So I was curious about how did you guys manage to like behave in this way. I bet it's like positive reinforcing, like as you said, like, okay, how can we learn from this? But uh I think it's like kind of harder to apply than to say it. So is there some practical way that you see and you observe that you guys use to like reinforce the independent thinking?
Yeah, no, it's a good question. I would say that, it starts kind of at the top with Stig and leading with his own context and leading by example. And, he's never, whether I've made plenty of mistakes. We've tried plenty of things with the newsletter that have been worked out. And for example, he, set the precedent of, at the top of, okay, well, if you can tell the CEO the mistakes you've made and he's not going to be upset with you, then, that trickles down. And everybody at the company sees that example and they say, okay, yeah, all right, it's okay to make mistakes. And, coworker made a mistake, let's figure out how we can move on. So I think the high context and, you find with any business, and I could think of, with the newsletter in particular, you could go through and you can micromanage people and you can essentially make sure that they never make a mistake. You tell them every single thing they should do, and you make a checklist, and you triple check their work. And at the end of the day, they send out the newsletter, or the business product or the service or whatever it is, and they're not going to make any mistakes, but the product is never going to change. It's not dynamic. It's not, you haven't created an environment and the context for your workers to adjust to a constantly changing world. So, with the newsletter, it's, rather than creating a checklist of every single thing you have to do, and this is how this should be forwarded out, and this is how this should be written, it's more leading by example, and say in the context of, okay, well, this is the audience we're trying to write for. These, TIP's values, our worldview, the kind of books we encourage people to read. And then, take that shared context of these are all the same books we've read and the same lessons we've learned. And then let's come up to the end, reach an endpoint of writing a newsletter that's 1,400 words long, takes maybe 5 to 7 minutes to read, is about the current news to some extent, while also being, long-term oriented. And let's do that every day. And you empower people to take ownership over their work and to feel a sense of pride. And as long as everybody's aligned to, okay, well, we know, this is what the final product generally should be. And then how can we get there? We want to write something that people want to read every single evening or every single morning, that informs them about financial markets. And after they finish reading our newsletter, they don't feel like they need to read anything else for the day, maybe financial news wise. Like, they have a good feeling for what's going on in the world. Maybe they've gotten some perspective. And so to me, it's really something we've internalized a lot, is not micromanaging people and empowering people to make their own decisions. Do you want to, we tested out, like I did a stock pitch competition, and it's like, okay, do you want to do that? Yeah. Do you want to, let's give out $1,000, start promoting it. And, it's your idea. You take ownership of making it happen. So that's sort of what I did. I started coordinating with the design team, figuring out ways to promote it, writing promotional scripts, stuff like that. And that was just one example of what I did, but I think anybody at the company is able to take those initiatives, and you don't have to get it approved by a manager. You don't have to get necessarily, Stig or anybody else to sign off on what you do. They'll give you feedback. But ultimately, if you think something is a good idea, you have the ability to test things out. And sort of like what I was saying, that flexibility is extremely valuable, because, we're not going to pretend that we have the perfect newsletter or the perfect podcast. And so we just have this checklist to micromanage people every single day. Then those products would stay stagnant. Whereas if you kind of have this shared context and you teach people and empower them to make their own daily decisions, it's like they know that they can, make changes and experiment with things and make mistakes, and that's okay. And the hope is that down the road and over time, we're continuously learning, and we're, taking everything we've learned and applied it to building, something that's marginally better every single day. And then those improvements, kind of like investing, compound. I think if you go back and look at what the newsletter looked like a year ago to what it looks like now, I would say it's an order of magnitude better. And I hope that a year from now, it'll be another order of magnitude better. And, that's just every single day we think about, what changes can we make, and just reflect on what we've learned.
Yeah, that kind of resonates with the Amazon model. Like, they try to make mistakes quick and incentivize this kind of learning. So I think they've applied pretty in a practical way the learnings and the teachings they've compounded over the years. So yeah, it's very interesting to. It's very atypical too, because most companies, like you said, try to micromanage and are very standard. And I think that's what makes people not have an edge, because everyone can do that. I think everyone can follow a clear path or a clear way to do stuff. But the way you guys do it really incentivize you to actually be intellectually curious, and as you said, do cool projects like the stock pitch contest and those kind of things. So that's super interesting. Okay, now we've covered a lot of the topics I was interested in regarding TIP and how you guys work there and the environment you have there. And I'm curious to know more about what's your actual approach to investing, because since your goal at TIP is to like share and share knowledge and teach people and not really direct people in some way or another, like you teach about things related to deep value investing and to things like Bitcoin, which are kind of contradictory or not something that you would expect. So I would like to know more about your actual approach to investing, and if you can like share with us some experience you had with investing, it would be very valuable.
Sure. Yeah, happy to. So, I don't know if I wouldn't say it's the best approach, but what I typically do is when a new investment, new strategy, whatever it is, kind of piques my interest, I try to give myself some, as I say, skin in the game
Okay.
to have the impetus to want to research it more. So, what I did in 2020, when Preston and Sig first started talking about Bitcoin, for example, I put maybe $200 into buying some Bitcoin, just so maybe it was enough money that I kind of cared about it. And it was like, okay, well, I don't totally want to lose this. So, let me just keep checking up on it and give me the push to maybe learn more into it. And so I've actually done that with a lot of things that I invest in. I've done that with Berkshire Hathaway stock. I've done that with momentum strategy ETFs, real estate investment trusts, different things. And I really have seen it as, again, building on this theme of continuous learning of, I don't want to say just pick random things and invest in them, but when you are introduced to maybe a strategy or a company that you find really compelling, I've found it beneficial from sort of a, maybe not as much a maximizing returns perspective, but from an educational perspective of, okay, well, let me invest a little bit. Let me have a reason financially to care about this, whether it's Bitcoin or Berkshire stock. And ultimately, because of some of those kind of small investments that gave me some skin in the game, it's pushed me to go a lot deeper into topics that I probably otherwise wouldn't have. In terms of my general outlook, you even more than me, I think of the advantages of being young. And I don't want to say that I'm risky with my investments, but we're at such a young age where we can afford to try things out, take risks, and really experiment. And we have many years and decades, hopefully, to maybe make up for any of those mistakes that we make. So I'm probably more willing to invest in things that I don't always fully understand, like I said, as a basis to continue to push my learning, and also more speculative things with the prospect of higher potential returns over the long term, and willing to incur that long-term risk. So I use a blend of ETFs and individual stocks. And so the individual stocks that I'm invested in, like Berkshire Hathaway, Apple, I try to think of them as being the highest quality compounders. And so when I own individual stocks, I want them to be companies that have a proven track record of higher returns on capital than the market average. And I think in investing, we're often told everything reverts to the mean, and to some extent mean reversion is a major factor, but there is something to be said about the quality factor of whether you look at Warren Buffett or Google or Microsoft, there are individuals and there are companies that have proven over long time periods. This is something that the author Jim Collins writes about in the book Good to Great. There are companies that achieve greatness and they can sustain it for years and decades, and they have almost a secret formula that isn't always so secret, because a lot of it boils down to some of the very simple principles that we talked about today, being, encouraging risk and empowering employees, and being intentional about the decisions that you make as a company, having good leadership, stuff like that. But there are definitely companies that have a proven track record of, like I said, compounding returns on capital at rates above the market average, and that hasn't necessarily mean reverted. Berkshire being a great example, even though it has, for them, those compounding rates have kind of slowly declined over time. But yeah, so I like to hold a couple really high quality names like that, companies that I think have such strong competitive moats. You think about something like Alphabet with its Google business. As far as I can tell, Google search isn't going away anytime soon, and that's a very powerful network effect that has created a tremendous amount of value. And then they're diversifying into other brands, like the tremendous success of YouTube. And so they have all of these valuable assets and different types of moats that I think enable them to just continue to compound at above market rates for many years to come, hopefully. And so I'm willing to pay a bit of a premium to own really high quality businesses like that have almost monopolies over certain parts of the economy. And then, like I said, too, I do use ETFs just to, there are parts of, I'm still a young investor, and there are parts of the investment landscape that I don't think that I can, as sort of an active investor, pick maybe the right companies that are going to be those really great compounders over many years to come. But if I have sort of a structural view that, for example, oil prices and energy prices for some, macroeconomic reasons are going to be higher over the next decade, I might invest in the XLE ETF, which is the energy and natural gas collection of, I think, maybe 30-ish companies in that space. And so the way I think about that is it's kind of expressing a bit of a macro view, and also being humble enough to say that, I'm not sure which companies in this batch, because I'm not an oil and gas markets expert, are going to be the winners. But I feel generally that sector in the market is probably positioned to perform better than the market average over maybe the next 3 or 5 years. And I try to set a target time horizon and really think through my thesis, and then be intentional about, okay, is this the best ETF to use? What are the fees? What are the different types of risk exposures? For example, are a lot of the companies based in the US? In Europe, what does the regulatory landscape look like in Europe relative to the US for energy and gas companies? So that's just one example. But it's really, I would say it's a fairly simplified approach that I use, where I try to concentrate my money in the very best companies, names like Apple, Alphabet, and Berkshire Hathaway, with very strong moats and proven track records. And then I don't want to say play around a little bit with ETF exposure, but I do, writing about the markets every day. I'd like to think I have a good feel for different market sectors. What's kind of the direction of the economy, what's positioned to do well, where the odds, there are no certainties in investing, it's all probabilities. But, would I say, are the odds tilted in my favor that, oil and gas companies are going to do well over the next couple of years, because maybe energy prices are going to be structurally higher, because everything we've had with the war in Ukraine and disruptions in the supply market, underinvestment for many years, kind of structural factors like that. So yeah, that's my general outlook. But I caveat all that to say that I'm continuously learning, and like I said before, we're young enough that I think anybody who is really interested in investing shouldn't be afraid to experiment. And again, the kind of a theme of the conversation today of, I don't want to say just invest in anything, but in many ways, especially at our age, when you can afford to make mistakes, using investments to give yourself some skin in the game, and really ultimately the education, in my view, is actually maybe more valuable than the financial returns you might get from investing a couple $100 or a couple $1,000. because you're going to learn things by investing in Berkshire or experimenting with ETFs or experimenting with options. You're buying Bitcoin or buying gold. That knowledge is going to carry with you for the rest of your life and hopefully help you make better financial decisions in your future. So.
Well, that's a super interesting approach, and I kind of relate to that too, because in the past I've invested in, like, just bought a couple of shares of some companies, for example, Zim, which is like a shipping company from Israel, because I was talking with this Israeli real estate guy, and I just wanted to learn more about Israel and the business model. So I really relate to that, and I think it's very interesting approach to have skin in the game, because, like, as you said, when you have skin in the game, you are more motivated to learn about this, more curious too. So that's very interesting, and time will play to our advantage, hopefully. So we just have also to compound mistakes and learn from them. So it's super interesting. One last question about this topic is, like, you mentioned that you invest in these wide mode, high quality companies. Do you, like, how can I say this? Do you take any interest in the valuation? Let's say, do you use any kind of valuation methods to, like, I know that when you're investing in high quality, maybe you are willing to pay a premium, but I bet that there's not like an infinite number that you would pay. So let's share with us what are your kind of methods and approach to that topic.
Yeah, I think that's a big question. I would say I have mixed feelings. The typical, if you went on Wall Street and they're going to tell you how to value a company, what you would do is you would take all the current financials, you'd make projections for the next 5 years or 10 years, and then you'd use a discounted cash flow model. You'd put some sort of discount rate, based on market premium and the risk-free rate, as they say, and you'd use that to try to approximate the current value of the company. And on the one hand, I think theoretically that makes a lot of sense to do. But on the other hand, I maybe would flip the question around and ask anybody, okay, well, what is your intrinsic value as an individual, right? Let's do the same thing. Let's model out your expected cash flows over the next decade, and how much are you worth as an individual business, almost. And to be honest with you, I don't know how much. I don't know what I'm going to be earning or my expenses, how profitable I'm going to be 5 years from now. I'm not even really, that number could change a lot next year. Could go up, could go down, right? So if we can't even predict what our own financial situation will be, and we couldn't even do that analysis on ourselves and come up with like a decent intrinsic value number, I think it's very tough to do that for a company with tens of thousands of employees, operations all around the world, very complex markets that they're participating in. So it's a tough question, but that said, of course, you don't want to just blindly invest in companies. I use different indicators like that, I would say, as kind of a ballpark to get me to feel comfortable with maybe the price that I'm paying. And if there's something that really does just seem egregious, I probably put it in a pile that I would watch. And if there's a sell-off in the market, I might want to return and pick up the stocks at a discount. But generally speaking, like you said, I think it is worth paying a premium for the best companies. I don't know the stat off the top of my head, but there's some incredible amount of, well, there's a recency bias to financial markets of where most of the companies that are listed today are winners of the present and the past, and so they're the biggest and the best companies in their industries, and they've survived and they've made it into the S&P 500, and they've acquired a bunch of other businesses and so on. And so there's a bit of a hindsight bias there where we're only seeing the very best companies that survived, but actually I believe the vast majority of companies that if you look at the last 100 years, every company that's ever been listed in the stock market, right, and gone public, the majority of them were not winners. They either, fell into mediocrity, or they went bankrupt, or they were acquired by a bigger company at a discount, stuff like that. So most public companies are actually losers. And if you can find, those big names, those big companies that are the proven track record of success, it's typically a pretty safe bet, especially in today's economy, where you can look at these names like Alphabet and Amazon, and they've haven't stagnated in the same way. Like, General Electric was one of these like leading companies that survived for decades. And then you could argue that the bureaucracy and mismanagement caused the company to essentially fall apart. And now it's going to cease to exist and be split up into 3 different units soon. But a lot of these companies like Netflix and, like I was saying, Amazon, Apple, that disruptive culture, it seems like they've never lost that. So to me, it'll be really interesting to see whether these companies is $100 billion, $1 trillion market caps, whether they can continue to maintain that culture of innovation and risk taking, such that they're constantly disrupting themselves and not necessarily as fragile to disruption from startups. To some extent, that'll always be true, but it does seem like more than in the past, some of these companies are really well positioned to thrive for years to come. So if I can find really high quality companies, and I feel like, looking at earnings multiples and their valuations relative to peers, and think about how I expect their earnings to compound over years to come, their track record of success, I am more inclined to invest. And really, to me, you're investing, or buying shares in a company, you're putting a lot of your money to be managed by the company's executive leadership. So it's really important to do due diligence on the people that are actually running the company from the top, and make sure that they're good stewards of your capital. So I'm not sure I gave you a very direct answer there, other than to say, conceptually, the cash flow, discounted cash flow model is probably the right way to think about it, but you shouldn't just, come up with a discounted cash flow model and say, oh, okay, it says Apple, my model says Apple's worth $100 and it's trading at $80, so I should go out and buy it. You use that as kind of a guiding stone of like, okay, well, I think potentially the company could be worth more than it's currently priced at. And you look at it and say, okay, yeah, the company has a proven track record of compounding capital at rates above the market averages. It's got a very strong leadership team. It's got a culture of innovation. It has these really deep economic moats. And yeah, like then it becomes much more obvious to me, especially if I feel like I have an understanding of that business and how it works and the industry factors that are affecting them. It becomes much more obvious to want to invest there.
No, you were pretty straightforward, and I think that the smartest thing you said today was like, we should flip the question the other way around, because that's really interesting way to put it. Because sometimes, especially when investing with small sums of money, the wealth of knowledge that you get from actually putting your money to work, it's greater than whatever return you can make. Like 20% return on $100 is still $20. So like you have to start in some point, so like compounding. So but yeah, it's an interesting way to put it, and very very I think it helps you understand more. And to your point, you don't know your financial situation in a year, 2 years. So your goal here is really like to try and understand more about these situations and the modes and all these kind of things. So yeah, I think that's a perfect wrap up of our conversation. And I don't know if you have anything to add, but I really want to thank you for your availability, especially because I was very surprised when you actually agreed to, like, because we talked a few days ago and I said, oh, can we talk on Friday? And you said like, yeah, super cool. So I really have to thank you about this. And yeah, it's a pleasure to always meet with smarter people than me and that have much more experience. So yeah, thank you so much. And I hope we will chat soon too.
Yeah, I'm excited. It was a pleasure to be on, and I think you're going to do great things, David. So I look forward to staying in touch, and yeah, had a lot of fun. I appreciate you having me on today.